In this video, we're going to do some incredible things. We're going to go through the sub-components or sectors of the S&P 500. Now, why do we want to do that? Because when it comes to Bitcoin, Bitcoin typically leads in terms of weakness if we're going to get any particularly bad sell-off. And the S&P 500 components can throw some incredible signals that you really should know all about. If you do, you're going to decrease your anxiety and you can increase your preparation. Let's get into it and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. I've got a really fantastic video here for you today. This is going to be a bit of a game changer because we're going to look into things that we haven't spoken too much about recently. And I'm also going to keep an eye on it. I'll tell you where to set levels on these sectors and what you should be looking for. If the market is going to get weak and going to sell down like this, there are signals. And don't forget, if the market is going to turn around, there are signals as well for that. And if you like this kind of content, if you want to stay ahead of market movements and be more of a financial and emotional blessing to yourself and those you love, please smash that like button and don't forget to subscribe. Okay, let's get into it. Many people think that the crypto market and the stock market are disconnected. When we look at the S&P 500 futures, the Nasdaq futures, the Dow futures, and the Russell futures, what we see is that blue line against that particular future. And what is it telling us? It tells us something very, very important. Bitcoin follows the stock market. This means that we need to keep our eye on the main stock market to understand how the crypto market is going. So how did the stock market fare up in the past 24 hours? All sectors were up 0.83%. I typically run you through all of these stock market movements, but the issue is I thought we would look a little bit deeper into the actual underlying health of the S&P 500 and also its subcomponents. It's going to be a really terrific video that will give you an edge inside the market, and that's what it's all about. Looking into the S&P 500 right now, we can see that the past 3 days we've just done a fantastic bounce. Now the blue line in the background is Bitcoin. So Bitcoin is not really buying the bounce at the moment, but it's starting to turn around in the very early phases. Another thing to understand is Bitcoin tends to lead the stock market into and out of corrections. So when we look at Bitcoin, the blue line as opposed to the S&P 500, it becomes really obvious that the two are associated together. For example, Bitcoin and the stock market come down and Bitcoin and the stock market recover. But you might notice here, Bitcoin recovers more quickly. It tends to bottom out and go for it when it recovers. And it actually does tend to get a little bit weaker into those particular blowdowns. You can see right here that the S&P 500 was on the way up and Bitcoin was on the way down. Now, are we getting a similar kind of reading at the current time? Well, it looks a little bit like that, but have we formed a local bottom? To answer this question, we need to look a little bit more deeply into the intercorrelation and interrelationships between subcomponents as well. For example, we had this sell-off from around February down to around April. Now, if we look at that as a reference point and look at the current price action, that will give us some indication as to if history is repeating or not. Fortunately, there are a lot of different ways that we can look at the S&P 500, and a lot of people look at the S&P 500 and seek the stocks above their 5-day average. When we saw things starting to roll over, we saw the stocks above their 5-day average, which is measured by this, it's currently 27.43%, just get lower and lower and lower. Also, you can notice that it's just always going up and down. What I'm going to do is basically put a 9-period simple moving average on this and turn off the candlestick. Now, the way to do that is just to go into settings and do it like this, so we can now have a bit of an understanding as to patterns. Now, when we look at the 5-day moving average, it doesn't realistically tell us that much. So let's go a little bit deeper and see the 20-period moving average. What are we seeing here? We're trying to determine, is the market coming down or is it strengthening? Now, from the 20-period moving average or the 20-day moving average, we can see the market is looking rather healthy at the current time. What about the 50-day moving average? You'll notice this big dip here. There was a really big dip before the sell down. Are we seeing something like that? No, not at the moment. What about this? The 150-day moving average. Is it curling over? Is this average curling over and going down? No, it's going the other way at the moment. What about the 200-day moving average? Well, 62.62% of the stocks in the S&P 500 are currently above their 200-day moving average, and it looks like there's a lot of power in this at the current time. So are we anticipating a complete and utter breakdown of the S&P 500 and also, of course, Bitcoin? Not necessarily, not by these statistics at the current time. There are, of course, some other things that we can look at. The VIX is a very important one. When the VIX starts to come up, that places negative price momentum inside Bitcoin, and you know Bitcoin and the stock market are completely correlated together. Now, are we seeing a continued upsurge in the VIX? For example, the VIX broke out and started to come up. Are we seeing something like that? No, we're not. We're seeing the VIX come down. Now, could the VIX spike up? Of course, the VIX could spike up. It's been unnaturally low for a very long time, but this is not a reason for panic. This is a reason for preparation instead. Now, how do we prepare for this? Well, we know the structural levels on the S&P 500 and Bitcoin and the different charts. And what we simply do is look for structural confluences under the current price and then just inhabit those levels. That's, of course, where the algorithms are going to kick in and buy. And what about if we look at specific sectors? Now, sometimes the line chart is a little bit of a hard thing to look at. So why don't I go down to settings and just turn all these candlesticks back on? Now, what we're seeing inside energy is quite interesting. You can see that energy is very up and down at the current time, but has literally just made an all-time high in terms of this price action and has just retraced. Now, these retracements are very normal and very natural. What did we see when Bitcoin was weakening? Did we see something like this? Actually, we did see something like this. So this is something to just be aware of. If we start to see prolonged sell-offs in the energy sector, which is SPN, that is a warning sign and something that you'll need to take note of. What's the best way to take note of it? Well, one of the things that you could do is to add an alert. Now, what you can do, and when you add an alert, you can say, if it crosses down on a specific price, we've got 658 here, just give me a notification. You want one notification or a series, and what you do you want a message? What kind of sound do you want to play? That's all in the sub items, but we'll create one right here. Now, how do we know where it is? We can just tick on it. So if it crosses down below this part of price action inside energy, SPX energy, we'll know that there's something that we need to pay attention to. Now, if we start to get drop downs like this, it would be pretty obvious that Bitcoin is also showing weakness. So this is one guard that we can put against our portfolio. What about the S&P financials? What did they do last time? There was a really big drop off. Well, we can see that as they were dropping off, that moving average was actually curling around. We use the moving average to just tell us what retail is looking at. We look at structure, but it's a very important thing to know what retail looks for. Now, we can see at the moment that Bitcoin is coming down, and Bitcoin was coming down here as financials were going up. Now, what would we want to see if we're going to prepare ourselves for any kind of retracement? Now, why would we want to actually prepare for a retracement? For example, if Bitcoin was up here around, say, the $100,000 mark or north of that, and we prepared for a retracement and we were looking at how Bitcoin was moving down, and of course this applies to stocks and everything else, you could have bought around these really low levels. Now that is a pretty good idea. To get 25% off and then just ride it to the upside is fantastic, but to get 25% off your portfolio is not so fantastic. Again, we can do a similar thing. We can just place an alert, go to Add Alert, that's a right click, and just press select in the condition crossing down, or else you might get a little bit of a whipsaw here in terms of this signal. But at least this gives you a bit of an understanding. If it starts to go down, you've got the attention before most people even know what's going on. And that's what the CTKS method is all about. Realistically, we're all about understanding before things happen. Now, when we look at healthcare, what are we seeing? A bit of a kick up. But the interesting thing is healthcare has been really weak in terms of a component of the S&P 500. So something that you might like to keep in mind. Now, as Bitcoin was coming down like this, we're just at the starting point of Bitcoin's descent, if that is the case. I think there's a lot of potential for Bitcoin to actually bounce up here, but we'll look at that a little bit later. So if we look at healthcare, we're seeing that as the last time Bitcoin was starting to come down just pretty much like this, healthcare was starting to come up. Now, if we just break above all of this, and this is pretty constructive price action, we've had a base for a large number of months, we could get some really good positive movements in healthcare. But if they start to break down, well, that's a different question and a different point in our analysis. We'll have to look at downside momentum. You could put an alert in here if you like, and just keep your eye on any descent below around that 1564 level. In fact, why don't we just put a little bit of an alert on that and we can have crossing down. So we've created an alert on that. Let's have a look at real estate. Real estate is looking a bit woeful at the moment. Now, could it start to get above this? Well, it's also in somewhat of a basing pattern. It's trying to understand and decide, do I go down or do I go up? If it goes down, the main markets are leading that descent downwards. If it goes up, that means the S&P 500 is recovering. We had a really interesting fall off in lumber prices just recently. If you want to have a look at that, you just go to the little plus icon, compare a symbol lumber, and we're going to look into lumber futures. Now, how do we do that? We'll just pick the forward contract. Okay, and just pop that in as a new price scale. You can see that lumber futures have been coming down quite significantly. The last time they did this was in a crash. So this is a signal that we need to pay a bit of attention to. You can see lumber going up here and coming down here. If this is the case, we anticipate that the real estate sector will get hit. And if you want to get rid of it, you can just click on it and press delete. Where could we place an alert? I think a good alert would be the sweep of these lower levels, and let's just do it crossing down. You can do it every time, so you get the up and down price action if you wanted to. Now, let's look at S&P 500 materials. This is looking actually really constructive. It's going up and down and up and down, and it's going more to the upside to the downside. So that's pretty good stuff. Now, when we look at the S&P 500 rolling over, that occurred here, and Bitcoin was throwing a bit of a forward signal. So we also saw materials coming down, and that was a pretty good proxy for what was happening inside Bitcoin. Now, we noticed that Bitcoin has just recently made an all-time new high and then has pulled back, and it's pulled back quite significantly. And the alt market has been under duress as well, because when Bitcoin pulls back, the alts really get smashed. So what do we see here? Well, in terms of materials, this is really constructive price action. It's a little bit negative because we're under that just simple moving average, but this is nothing to just be concerned about. We can go under and over. It's pretty much that way. But the momentum is to the upside. So if we were looking at this from oh God, I think this thing is weakening and we're going to get this sort of action, where would we be looking to set an alert? Around this area, so crossing down around that 570, just a little bit below the 570. Now, if you want to move an indicator or an alert around, you can just by clicking on it and doing this. So really, realistically, we just want to look underneath this area, so a little bit below 570, around the 566 or 567 mark. Are we detecting that the world is going to end and everything is going to sell down? No, not realistically, no. Now, let's have a look into utilities. It's pretty interesting that we've got a directional correlation, fairly strong one, with utilities and Bitcoin. That's a good one. Who would think that? Now, let's have a look at what utilities did in the past push down we saw in the S&P 500. So Bitcoin was coming down, and we know that this led the S&P 500 coming down. Did we have any strength here? Yeah, we had a degree of strength, but it started to weaken, started to get weaker here. This is something of an issue that you want to keep in your mind, because if utilities is doing this at the current time, it's a little bit of a signal. So there's a weakness inside the markets in terms of utilities. Now, sector rotation can be a really interesting concept, but we just have to keep our mind on the concept that when utilities gets weak, it shows that there's a weak market. Now, where would the appropriate indicator be for an alert here? Well, it's likely that utilities could come into this area, so we'll just put it down a little bit around that 411 mark. Now, we can have a crossing down indicator, and if this goes off, and they'll all sound in like, Christmas bells or something like that, if it starts to happen. We only do this to be prepared, and it's not a bad idea to do this from time to time. Let's have a look at the industrials. So when we're looking at industrials, we're getting a fairly good approximation of Bitcoin and the industrials as well. The industrials are definitely looking a little bit weaker, but if we see continued upthrusts in the S&P 500, this will turn around. But this is not actually a constructive signal. This is a little bit of an alert. So where would an appropriate indicator be? Just here around that 1239 level. So let's you can see I always default to every time because I want to see the wave. Now, around that particular level, the 1239 is a good area to put an indicator. Now, or an alert. Sometimes you can't add these alerts in depending on what version of TradingView that you actually have. But keeping our eye on industrials seems to be a pretty damn good idea because there's a lot of intercorrelation between how industrials move and how Bitcoin moves. Hey, digital gold, is it supposed to be acting that way? Well, it is. Okay, let's look at another subcomponent of the S&P 500. This is information technology, and of course this is much more associated with what Bitcoin is. Now, we saw that weakness in Bitcoin leading the weakness in the S&P 500, and you can see that intercorrelation between the blue line, which of course is Bitcoin, and information technology. It's pretty good. Now, what is IT doing at the moment? Well, it is in a downtrend. So this is something that we have to be aware of. If it goes too much below this, for example, below the 5,000 mark, that is not a good thing. So let's just go a little bit higher to around that 50-50 area. Set an alert there, because that would be a sweep of liquidity through those areas which would just render everybody useless from who invested in IT from July. So we need to be aware of these things, and this is definitely what the market makers do. They look for all deep liquidity pockets inside the markets. Now, if information technology continues to roll over and doesn't recover up, that is a problem. So we've already got this one covered. Now, I'll be updating you on what's happening here, so make sure you subscribe to the channel and set that bell notification icon. Look at consumer discretionary. Consumer discretionary is doing a really good job of approximating Bitcoin at the moment. And what do we notice with consumer discretionary? We've got a bit of a breakout here. Wow, this is very good. This is a bit of a plus. You'll find that there's always pluses, always minuses, and always neutral signs in the market. But this is a very good signal. So this is something that we want to keep our eye on. And I'll make sure that I'm covering this off. Where would a good part or good price path be to just set this around that 1817 mark? So if it crosses down 1817, we'll know the consumer discretionary is getting weaker and weaker, and we'll make appropriate adjustments. And I'll keep you in the loop, so please make sure that you're subscribing and you've got the bell notification icon on as well. What about communication services? We can see com services is really quite a good signal of some directional movement inside Bitcoin. And what is it doing? It's breaking out. It's going gangbusters. So this is a pretty good sign. I think that we can just leave this one alone for the time being. Of course, things could go the other direction, and if that's the case, okay, we'll make sure that we're keeping a finger on that pulse. Just a quick update on gold. Yesterday's video, we were talking about the price path. Now, the price path of gold predicted that gold would go down, and that's actually occurred. Don't forget, these price paths are not meant to just give you an indication of where price will be at any specific point. It's showing you that there's structure up there where we expect a level of exhaustion and a retracement and pullback. That is what it's talking about. Of course, the paths do a fairly reasonable job of predicting price throughout the month, but that's not their purpose. Their purpose is to show you where the structure is underneath the chart that you're looking at. The true support, true resistance. Looking at total crypto market cap, just a little bit of an update from yesterday's video on the daily basis. We looked into this rectangle here, and I was suggesting that structure would just create exhaustion and a move down. We got that in the past trading session. Now we've looked into the components, and there's some components there that are particularly good that we can keep our eye on. And we would anticipate that the crypto market should follow those positive sectors up. So now we're doing more than just looking at one chart. We're doing what's called stacking of probabilities. Looking at the SZs on Bitcoin, we can see that from around that 107,500 up to around the current price, we've got reasonable levels of support. So what we just have done recently is we've come down through all of these buy levels, and the sellers are slowly running out of steam. This is actually really constructive price action and something that could give us a bit of a leg up. Now, it could go like this and like this, it could go like this and like this, but if it goes like this and like this, we have to bear in mind that it could continue to go down. The bullish case is for us to go from here and start to challenge this 111,400, make our way through the 112,600 overhead structural resistance, positive CTKS gap up to around the 119. And the bearish case is that we continue to consolidate or we break below these lows around that 107,500. As an investor or a trader, it's really important that you keep your eyes on the price. Price is reality. We're starting to get the very first signs of really good positive momentum inside Bitcoin, and we know some of those subcomponents that are particularly associated with Bitcoin are literally leading the way. With this in mind, if we start to see continued strength inside the S&P 500, things will turn around. Continued weakness in the S&P 500, expect more downside negative price action. And if you haven't subscribed already, please hit that subscribe button and make sure that you turn on notifications. This period of market volatility is a very uncertain time, and we'll be here to help you to understand it. Keeping your mind positive is really important, so if you do daily positive affirmations for abundance, financial success, and happiness, you're helping your mind to get into the right gear. Just always know that the universe wants you to succeed. Every day you can show kindness, integrity, and gratitude, because kindness will make you feel better about things. Integrity, you'll not have to worry about things coming back and biting you in the butt, because there's nothing that can happen that way. And gratitude. Gratitude is making sure that what you have is enough. I'd just like to let you know how much Kate and I appreciate you all. Just keep your positive attitudes up and just remain dedicated and committed. If you focus on winning and learning and never blaming, you're going to be wildly successful. Blame not only disempowers, it robs you of positive change. It's normal and natural, but it won't help. Have a great day or night ahead, my friends, and please let me know if you made it up until this point. Of course, you're absolutely awesome. And perhaps just put the word BORSOG somewhere. BORSOG is buying on red, selling on green. It's a way we do our magic. Have a great one ahead, my friends. Bye for now.